Welcome to the Joint Custody Podcast. I know for the usual viewers, I think you normally would see a big German guy in my place named Ben. So Ben is not going to be joining us on this podcast. We're going to have a few changes going on over the next few weeks. So we'll make some announcements then. So you get stuck with me. So my name is Mark Mayerfeld. I'm the Chief Revenue Officer at GK8 by Galaxy. I've been with the company pretty much since inception for the last 6.5 years. My background prior to that is in traditional fintech. And I'm happy to be joined by Chris Beck, who is the founder of Tradias. And I'm going to actually give Chris the microphone to actually introduce himself a bit. Please.
Yeah, Mark, thanks for having me. And I guess at least you got one not so tall German guy on the podcast today. So here we go. Yeah, my name is Chris. I'm the founder of Tradias. I actually have a background in traditional finance as well. Spent 8 years in Canada, most of my time there on various different roles on the trading side, and then developed a keen interest for crypto and digital assets in 2017. Maybe we'll get the chance to talk about that a little bit in a few moments here. And then went back to my hometown of Frankfurt in 2020 to start a journey with Tradias. Been doing that now for 6 years. As most of you probably know, that's been a crazy ride over the last 6 years. But yeah, enjoying every moment of it and glad to be here today.
That's great. Thanks. Yeah, I mean, and really, I wanted to get into a little bit about how you really got into the crypto and digital asset space. And then again, I think you've created Tradias, and I think if I remember correctly, it's a together with Bankhaus Schich. Is that part of it correctly?
Yeah, exactly. So as mentioned, back when I really started looking into crypto, I was still at Scotiabank in Canada at that time, in Toronto, on the hedge fund coverage desk. And in 2017, there was three sectors that the Canadian hedge funds were extremely interested in, especially on the short side. And that was publicly listed companies that were either involved in cannabis, blockchain, or crypto mining more specifically, right?
And you didn't choose cannabis, I guess.
No, I kind of like, I've heard about cannabis. I kind of had an idea of what it was, and I'd never heard about crypto before. So I thought I need to look into this, right? And actually what was happening at the time a lot is that shell companies were changing their names from, I don't know, Long Island Iced Tea into Long Island Crypto, and then you would see a big spike. That actually piqued my interest. I had a personal trading strategy that was actually based around those name changes, and I would trade those names quite frequently. But then I really started looking at the technology behind it, right? And back in the day, we had 7 or 8 traders on the trading desk, but probably 50 to 60 people that were handling and processing the transactions in the middle and back office. And after sort of going down further and further down the rabbit hole, I became convinced that blockchain technology really has the potential to significantly revolutionize the way and improve the way how we interact in traditional financial markets. Back then, I was discussing the idea with my 2 co-founders, who were at the time and still are today members of the executive board of Bankhaus Schich. Now, for those of you that don't know Bankhaus Schich, that is a traditional market maker on the Frankfurt Stock Exchange here. It's been around for 40 years. So it really has liquidity provision market making in their DNA. And after 3 years of sort of bouncing ideas back and forth, we said, okay, why don't we try to take that market making expertise and trading expertise and try to bring it to this new asset class that is evolving, naming crypto, but with a different approach, and really trying to offer this to institutional clients in a regulated and secure way, so that trading crypto or digital assets just feels like access to another asset class rather than this big monstrous new venture where you don't know what's happening, and then all the difficulties that come with it. And yeah, that led to the decision to move back in 2020 in terms of the relationship between Tradias and Bankhaus Schich. So it is true that at the beginning, this relationship was quite helpful. So we basically had a, let's say, revenue sharing agreement, right, or cooperation agreement, where Tradias was able to leverage the licenses of Bankhaus Schich from day one. So that allowed us to get going pretty much right away, which was a huge advantage, of course, as you can imagine in the beginning.
And you're BaFin regulated, correct?
Exactly. But at the same time, we also always had the vision of having Tradias as a standalone, fully independent entity and operating as a fully independent company. And we actually achieved this goal now. Mainly, obviously, it was a long process and there was multiple steps involved, but really the big step was receiving our own licenses with Tradias, BaFin licenses in 2024, and then the MiCA notification at the beginning of 2025. So as of today, there's no more, let's say, existing relationships with Bank or Scheich. So obviously like those guys very much, but Tradias operates as fully standalone
Okay.
entity as of today. Yeah.
Awesome. So maybe can you tell us a little bit about, again, what are you doing? How do you, and where do you operate in the institutional arena, specifically in the crypto space right now?
Yes. So as mentioned, we are very much focused on the liquidity provision and trading part. We see ourselves as a regulated trading and infrastructure provider for most institutional players that want to get access to crypto and digital assets more broadly. As of today, we're operating mainly three business lines. The main focus is our OTC spot trading offering. Here we interact with a variety of different institutional clients, neobanks, neobrokers, traditional banks with a large retail base, but also some more traditional, let's say, B2B setups. So for instance, family offices, corporates, asset managers, you name it, right? Having said that, I would say that the B2B2C model, so any, let's say, client of ours with a retail base has certainly been the sweet spot so far for our product offering. We stream prices 24/7 for over 120 coins in multiple different fiat currencies and/or stable coins. We process roughly 3.6 million trades a month on that side of the business. Usually have a couple of billion trading volume every month. So this is really the main business focus for us. We're also servicing some government organizations on that side of the business. So we've worked with a variety of German states when they confiscate crypto to help them basically convert that back into cash, which obviously is a nice stamp of approval, let's say, for the legitimacy of our business. The second business line, which kind of is very adjacent and very close to the OTC spot trading business, is our exchange market making business. So here we are a market maker on a couple of exchanges. However, we are quite selective in terms of the exchanges that we do market making on. So usually these are highly regulated exchanges that want to have a regulated market maker in return. Börse Stuttgart digital exchange here actually is one good example where we operate as a market maker. And then the third business line is tokenization. So here we've helped bring assets on chain. However, really the sweet spot or the biggest USP that we see that Tradias can deliver is not necessarily the tokenization itself, but more so the liquidity provision again. So really providing liquid secondary markets. I think when you look at a lot of the tokenization products and projects out there that have happened so far, to really the missing piece so far has been liquid secondary markets, and that's where I think we can deliver value to our customers. We've done numerous projects in the past on that side of the business. To be very frank and very honest, not a lot of them have been, let's say, revenue drivers for the company so far. But I think we're seeing a little bit of a change there now. And going forward, we really see ourselves with the licensing and the infrastructure as a one-stop liquidity provider for multiple different asset classes that settle on chain, whether that's crypto or tokenized assets. Yeah.
Yeah, I'm going to get into one of the points you brought up a little later on in the conversation, but you mentioned Börse Stuttgart. I know there's a deal that's pending regulatory approval right now. Can you comment a little bit on the rationale for that deal with Börse Stuttgart?
Yes, absolutely. And you said it correctly. So big fat disclaimer at the beginning here. This is definitely subject to regulatory approval, hoping that will happen fairly soon so that we can move on to the closing of the deal. But for us, the deal made sense for a variety of reasons. I think number one, what we're seeing in Europe, also with the changing landscape because of MiCA and the evolving regulatory clarity, bigger players moving into the market as well. We do believe that consolidation needs to happen in the market. We've been saying that for 18 months now. So for us, it was really a question of, let's say, finding the right partner where we believe, joining forces and combining forces can make a lot of sense. I think with Börse Stuttgart, we've found that partner for a variety of reasons. Number one, I think clients, and especially as more traditional institutions move into the market, they really demand regulated end-to-end infrastructure rather than very specific services, right? And I think when you look at what we have today at Tradias, and also what Börse Stuttgart Digital is offering today on the digital asset side, the setup is highly complementary. Börse Stuttgart obviously has an existing custody solution. They have a brokerage arm on the retail side. They have exchange infrastructure. They have a very large institutional reach and obviously a very strong brand as the sixth largest exchange group in Europe. At the same time, Tradias obviously has a lot of expertise on the liquidity provision and trading side, extremely good liquidity also with the existing client base that we have. I mean, we do believe that we're the market leader in Germany and probably in the European Union when it comes to regulated crypto trading at the moment in the B2B2C segment, right? And combine the client base and then combining, as mentioned, the services that we can provide allows us to cover a large part of the value chain that I think institutional clients will come to expect from players. And having that scalable infrastructure is really important over the next few years and going forward. And then lastly, and I think that's very important in any deal really, is obviously the cultural fit, right? I think when you look at us, needless to say, we're both based in Germany, but both BaFin regulated, but sort of having that, let's say, serious approach to digital assets, regulatory first approach, I would call it, right? Also in terms of the client base that we're trying to cater to, there's a lot of similarities here. We've known the team for a number of years, and that was also an important part of the consideration, at least for us, to move forward with this deal.
Yeah, they're a great team. We'll just have to discuss at a later point the custody side of things, but we'll leave that for another point in the conversation.
Yeah,
Just kidding.
very fair point.
So,
No, I mean, technology, we've been discussing this. I think in terms of technology, you got to be flexible and to a certain level agnostic, right? And look at different solutions. So I think that's the beauty about the digital asset space. I think there's always room for collaboration in one way to another. So yeah, we're
without a
always
doubt.
open to talk.
Without a doubt. So in general, I mean, at Tradis, you seem very successful in the B2B to C model, and you have large clients like Trade Republic and some others. How many retail clients in Europe do you think I'm talking about indirectly, how many are you touching in the market? And is the retail market driving crypto adoption here?
Yeah, so I think when we look at that market segment, B2B2C, we try to differentiate for our own setups between exclusive setups. So exclusive setups can be setups where either contractually we're the only liquidity provider or where we are virtually in an exclusive setup of some sort for operational reasons or another number of operational setup reasons. And then obviously those setups were in competition with other exchanges, liquidity providers, you name it, right? Now on the exclusive side, we are servicing, let's say with one client pending to go live, but once that client is live and fully up and running, we are servicing 14 million retail clients in terms of technical reach indirectly via our partners, right? And as mentioned before, I believe that within Europe makes us the leading player in that segment. Now, that doesn't mean that all of these clients are trading crypto, right? Because some of these partners and clients that we have, obviously, there are hybrid platforms. So they have an equities offering, ETF offering, and they launch crypto at a later stage, right? So maybe not every client is interested in the crypto offering. Not every client might be active, but in terms of technical reach for those exclusive setups, we're servicing 14 million end clients indirectly with our pricing. And then when we talk about the competitive setups, we're probably reaching another 25 to 30 million end clients via those competitive setups as well, right? Where we usually capture, a variety of a share of the flow that those brokers, banks, etc., are accumulating from their end clients. And I think what's interesting is that in most cases, when you ask the end clients, they probably wouldn't even know who Tradias is, right? So our name usually.
Sometimes that's better.
Exactly. We're very happy with that positioning, right? We don't know anything about the retail business, and we're happy to stay in the background, providing the liquidity, being a trustworthy partner, and then staying in the background, providing the necessary infrastructure as well. And yeah, that's worked quite well for us in that segment.
Awesome. Now, obviously, I'd be remiss if we didn't bring up MiCA. You have to in every podcast coming up now. So obviously, MiCA's live, and with I guess what it's called the cliff edge is quickly approaching on July 1st. And there are many applying for licenses, including Asian exchanges, and the banks still seem to be lagging behind. I mean, as someone who's been in the space for quite a while, running a regulated business out of Frankfurt, how do you see the European competitive landscape evolving over the next few years?
Yeah, I think to MiCA, there's a couple of aspects I would mention here. Number one, when you look at the existing crypto players, right, across Europe that now all have to adopt at various levels to MiCA, it's a bit of a twofold story. For players like us who've been BaFin regulated basically since day one, first under cooperation with Bank Scheich and now as an independent company, having that MiFID regulation, MiCA was let's say, a relatively small step, right? A small additional step because I think the regulatory burden was already quite high. Now, again, we've chosen that by design because I think that the clients that we want to work with, they want to have, let's say, very trustworthy, highly regulated counterparties. So even though it does come with a couple of pain points at times, we've chosen the hard path because we believe it's the only way to really gain that trust from our counterparties. So MiCA has been a very good thing because it sort of levels the playing field and also forces maybe some of our competitors who are not in Germany and maybe previously were licensed or regulated in jurisdictions where the regulatory burden was not as high, right? To basically come up and move towards the same playing field. What that also means, though, is for a lot of the smaller players in the crypto space within Europe, of course, doing business becomes a lot more expensive now, right? When you look at the compliance functions, AML, KYC, risk, you name it, and all the things that you now need to adhere to. For businesses that don't have the critical size yet, I think it's going to be very hard to survive on a standalone basis. And that was one of the main reasons for our thesis over the last 18 months that consolidation needs to happen, right? I mean, I don't know, Mark, if you've ever done the exercise of counting all the regulated market makers, custodians, exchanges, etc., within Europe. But I don't believe we're going to see 70 exchanges, 120 market makers, I don't know, 80 custodians in 5 years' time in Europe, right? That's just not going to happen. And at the same time, with MiCA, of course, you will see foreign players moving into the market, right? Because the market has become more attractive as a whole. And this doesn't only account for some of the international players. I also think, because that was part of your question, if I understand it, for some of the traditional players, crypto all of a sudden, or digital assets, has become a lot more interesting with MiCA. Previously, of course, you had to basically adhere to each individual country's rules, and they differed quite significantly at times. I would basically separate them into three main buckets, right? You had bucket number one, where certain jurisdictions tried to push crypto into existing securities regulation, right? So if you had a security license, that would maybe allow you to do crypto business as well, but it also meant that the rules and regulations in place were rather strict. Bucket number two was to create a whole new framework. Those were usually those CASP and VASP regulatory frameworks that you saw in a number of European countries, like the Netherlands, France, some of the Baltic countries, etc. And then you had bucket number three, where basically you had little to no regulation whatsoever, right? And now, of course, let's say with having that comprehensive framework, I think it makes the market a lot more attractive for the traditional players to move in. I think the banks will catch up. As we all know, the large traditional banks have never been let's say, the quickest or the fastest to adopt to changes. But I do believe that once they move in at scale, right? And I think that's what we're seeing now with the conversations that we're having with some of the prospective clients as well. They are really thinking about a comprehensive offering that they want to bring to their clients because they know they're not first movers anymore, right? If you come with a very, let's say, small offering, that's probably not going to excite anybody because you're basically 5 years behind. With all the regulatory restrictions that maybe some of the larger players have, you're probably also not going to be the cheapest. So you have to make sure, right, that apart from obviously having that, let's say, existing trust and existing relationships with the customers, you also have to have, let's say, a more comprehensive offering. And that's, again, also what we believe players such as ourselves need to move towards, let's say, an end-to-end solution in terms of the infrastructure that we can provide, because I think that's the only way that makes sense for some of the traditional players to move in. But I think we will see this over the next 24 to 36 months. And then I believe when we talk again, maybe in 3 years' time, you probably can single out a handful of banks that haven't done so. And I would expect everybody else to have an existing crypto/digital assets offering live.
Yeah, I mean, some of the banks have been waiting 5, 6 years in Germany, especially when they were ahead of the curve for BaFin regulation, and still not moving forward. But do you see that as a risk at all in your business? I mean, you mentioned the traditional finance, the traditional banks coming into the space. Do you see that as a level of risk to your business, or is it an opportunity?
For us, we clearly see that as an opportunity because we've always said we would rather see banks and traditional financial institutions as partners rather than as a threat or competition or institutions that stand in the way of crypto adoption, right? Because and then this ties back maybe to your earlier question, where is the who's driving the crypto adoption, right? And I do believe that especially in Europe, crypto adoption has been largely driven by retail so far. There's a variety of reasons for this. Number one is obviously we don't have, let's say, the most aggressive and most active buy side, right, on mainland Europe. We tend to basically have more conservative money managers, let's say, on the buy side, on the traditional side. So really, when we look at Europe, I think crypto adoption has been mainly driven by retail investors so far. However, I think that is driven by retail investors through a regulated environment, right? So I believe when you talk to most retail investors in Germany or multiple other countries in Europe, they will tell you that rather access crypto via the regulated bank, not deal with any private key management or having ledger sitting at home, right? And really basically having simple, easy access where they can feel they're dealing with a trusted counterparty and using the same rails that they're used to for all of their equities trading and some of their other trading as well. At the same time, when you ask about banks perhaps or potentially being a threat to our business model, I think in most conversations that we're having, we're seeing that the complexity that comes with market making in crypto is just so complicated to basically execute for a lot of these banks that they say, okay, when we look at how much we can make by maintaining and owning the client relationship versus also covering, let's say, that last piece of the value chain, we'd rather work with partners that can cover this for us. And that's exactly what we say. Listen, we're not a big distribution house. You know, we're not going to go after 1,000 of your clients, or even worse, when we move into if we were to move into the retail space, millions of your clients, because that's not who we are. That's not what we're good at. We're good at providing the liquidity and the infrastructure. You're good at handling the client relationships. And I think when we talk to most of the, at least European banks, that's sort of a vision that they share. You see some of the banks moving out of equity trading because it's too volatile. So I wouldn't expect those banks, the same banks, to move into crypto trading and say, let's do this 24/7, right?
Yeah, 24 by
Um,
7, I think is key. I mean, the banks, it's gonna take them some time and a lot of pain before they ever consider providing liquidity on a 24 by 7 basis. That we all know.
Exactly. The risk management that comes with it, right? We always talk about, let's say, merger events on the coin side, right? When you have protocols merging, you don't have a clear corporate action playbook like you would be used to on the equity side. So there's so many layers to this, right? That really complicate it in reality. That I think we're in a good position going forward to see those institutions as partners rather than as a competition or a threat.
Couldn't agree more. Okay, so as crypto progresses, I mean, with tokenized securities gaining traction and stablecoins becoming basically a serious settlement layer, and as you said, the regulatory picture is starting to clear up. How do you see digital asset space evolving in the next? I mean, I think this is a long time frame, 5 to 10 years, or even shorter, because I guess in the crypto space, every year is like a dog year. So, give us a little
Yeah.
color of what you see in the future.
Totally. Yeah, I think one of the major themes so far this year has been that obviously the traditional financial markets and digital assets world are converging, right? And becoming more and more, let's say, muddled, so to say. And I think there's a couple of reasons for that. When you look at, let's say, the crypto native platforms, Coinbase, Kraken, you name it, right? Multiple others, a lot of these players have to think, okay, what's the next growth area that we can focus on, right? And I think launching coin number 500 might not drive 1 million users from platform A to B, and I think everybody's realized that. So I think the next really growth area that a lot of these players are seeing, and I would agree with that thesis, is to say, okay, blockchain infrastructure is a great base layer to basically interact and do financial transactions more efficiently, right? At the same time, we want to allow our clients to do basically a entire portfolio allocation on our platform, right? While leveraging that very efficient infrastructure in the background. And that means obviously launching traditional asset classes on chain and basically being that go-to platform for all asset classes. And again, that's the thesis that Tradias has had since day one as well as a market maker to say, okay, eventually when the time comes, we want to be able to provide markets for all different asset classes when they settle on chain, as long as we can price it and find a reference market or find a price for that, right? And that's what you're seeing. I think the global market for tokenized assets is roughly around 30 billion, excluding stable coins, right? But we've never seen larger growth than over the last 12 months in this segment. We're currently working on a tokenized certificate, basically tokenized security that we're launching with a retail-facing partner. Obviously, money markets have been a big factor in the segment as well. So I think when you look in 5 years' time or 10 years' time, we're not going to be talking so much about crypto versus traditional assets anymore. We're going to be talking about, okay, what infrastructure is being used, right, by market participants to settle everything, right? All assets that you may want to have access to. And I think blockchain will be the long-term dominant factor or dominant winner here. So I think in 15 years' time, if you haven't moved to blockchain infrastructure for all of your asset classes, then you're going to be left out eventually. We were a bit too bullish at the beginning. We thought that would happen quicker. Definitely that development took a bit longer, but now I really feel that is accelerating. And on the crypto side, because this has very important implications for crypto as an asset class as well, because I think here you're going to see obviously some of the major protocols that really provide underlying value for that evolvement of financial markets succeed. So if you're talking about Ethereum, Polygon, Ripple, various others, right, that really sort of create an ecosystem and power some of that transition of financial markets, then I think those are the protocols and the projects that will succeed. But I also do believe that the growth for certain other, for a lot of the other coins that we're seeing out there is capped to a certain extent, right? Because again, I don't think you can sell that crypto-only story over the next 10 years. It's really going to become more integrated into the broader financial system.
Yeah, and I know we're coming up on time, but just as a quick follow-up, if you were advising a traditional financial institution entering digital assets today, give me one thing where you tell them to focus first, and we have to keep it short on it.
Yeah, I would say start with custody because that's usually, I think, the main blocker also from a risk perspective for banks to get going. Then figure out how you want to enable trading because I think crypto trading is the best commercial use case you will find to get going quickly, and that can finance actually all of your other projects going forward. So it's amazing if you have a grand vision of having everything on chain in 5 years' time, right? But if you want to finance that, if you don't want to tap into all of your R&D budgets internally and fight for those budgets at the board level, then start with crypto trading. That will help you to make some money to then expand on that infrastructure because once it's integrated, it becomes much easier to build from there. So start with custody, figure out a trading solution, start with crypto trading and your retail base, and then build from there.
Awesome. That's great. So I think we're going to wrap over here. So first of all, I'd like to thank Chris for the great discussion. I thought it was very informative and you were great on the call. And secondly, of course, and most importantly, I thank you for the audience for joining. And definitely we'll look forward to seeing you back on the next episode of Joint Custody. We'll be in touch on the email. We'll talk to you all soon.
Mark, thanks
Thank
for
you.
having me. Take care.
Thanks, Chris.